there is a clear line of effect between credit and prices. And then we have here the sudden stop. You see prices now in the United States are going down at 16% in annual terms. In Spain, there is no need to look at that line because it's a nonsensical indicator. It represents nothing. But because of the way it's calculated, it's non-representative. And quantities are just down at a very fast rate. In the United States, 41%, and in Spain, 59%. These lines are smooth, so these are T12/12s and not T1/12s, but anyway, that's the number. And then I was going to talk about the Spanish banking system, but I'll stop here because I already went over time.
Thank you very much, Jose. So if there is anybody on the table that wants to ask something or make a comment, Jordi? Well, since you mentioned it, let's spend a couple of minutes on talking about the strength of the Spanish bank system.
Let me show you transparency. Just one transparency.
If someone has to run to take the money from the deposit, so let's give the opportunity.
Can I get back? The banks are closed. Okay, now, I just want to, about the banking system, I just wanted to answer some questions like, there is no subprime in Spain. These are some sentences that you hear, and I wanted to answer if that is so. The banking system is solid because banks are more conservative with mortgages than in the United States. Is that so? And we have the best financial system of the world. This is ZP Dixit, so is that so? The Spanish system with mortgages is very different from the US in many respects, okay? In many respects. In terms of securitization, in Spain, securitization has gone much faster than the United States, much faster, okay? Multiplied by 17 since 2000, while in the US, which everybody is talking about CDS and CDOs and all that, is just multiplied by 2.5. Now, basically, what people say is Spain is free of incentive problems because in Spain, our system of mortgages is originate to hold, while in the United States is originate to distribute, okay? That is great. So instead of distributing the risk, you keep it all for you. That is perfect. When you have problems, it will go directly to you, not as a boomerang like it went in the United States, but it will be directly to you. Then the banking, well, forget about that. The rating is exactly the same problem as in the United States. AAA means the same as in the United States. There is no more anything else in the AAA system apart from what happens in the United States. The type of mortgages is different also in Spain because in Spain it's basically a personal credit with guarantee, while in the United States it's a real mortgage. So in the United States you return the house and that's it. In Spain you have to pay with the house and anything you have until you return the whole amount. And then the interest rate, the variable interest rate in Spain is 92%. It has been over the last years. The proportion of rate that was adjustable was 92%, while in the United States we're very worried that it reached 20%, okay, and they were very worried. And in terms of regulators, it's said that in the United States it's lax, while in Spain it's very strict because we have generic provisions and prices are better, and the Bank of Spain has been calling for a reduction in the growth of the rate of credit. None of these, so the second and the third thing, there is no advance whatsoever. So our prices are, you know, totally at the discretion of the bank. The bank decides basically how much money the person needs for the appraisal to get the 80%. And then the calls to reduction in the growth rate, nobody has done anything. None of the banks have followed those calls, okay? And here, I'll finish with this. I don't see if you can see. These are the CDS, the prices of CDS of banks and savings and loans, some banks and savings and loans as to the beginning of this week, okay? It was pretty good the beginning of this week. This has worsened for sure in the last days. But you can see, for instance, one of them is, the spread is 1,100, more than 1,100. That has crossed clearly the no return point, okay? And there are others like 600, 479. Those are very large numbers. I think today, two of the savings and loans were above 1,300. Okay, I still believe in the market. So these are CDSs. These are market prices of CDSs. So they don't look good, I would say, to say the least. They don't look good.
Okay, thank you very much. So if anybody in the table wants to say something, so let's move to the next big topic, which is basically we're going to talk is from the financial crisis to the real crisis. We are facing a credit crunch where firms have problems in getting funds to finance investment, and this, of course, has real consequences. Also, besides this financial crisis, there were some signals that were announcing that a real crisis was approaching. There was the rise in primary goods, and in particular of oil prices. Now it seems that the relevancy of this aspect is fading. Basically now oil prices are half of what they were 2 months ago. But however, today the stock prices has kept falling, and this basically is because of the fear of a global recession, basically because people is anticipating less future corporate profits. Moreover, now we have news of countries that were not appearing in the news, were the emerging economies like Argentina. Now Argentina is the country that appears in the newspapers, and in the next days we will see, or at least the people says that Mexico, Brazil will follow the same way. So of all these aspects of the crisis and others, Jordi Gali is the one that is going to make some comments.